Sit back and enjoy. It's time for Top That Trade. Joining us now, Phil Flynn, a Fox Business Network contributor, and Alan Nuckman, an options trading pro. Here we go, guys, with round number one, Casino Bet. The Supreme Court has opened the door for sports betting. Roll the dice on your favorite trade.
Bet.
Well, betting and trading are two different things. We want to get that out in the open right now. Trading is a discipline. You control your risk. Betting is usually a system of bad choices.
Well, you control your risk on betting.
Not really. It's very binary. Okay, but the point is, what is going to happen? Is there an opportunity there from casinos? Is this good or bad for casinos? And what casino benefits or doesn't benefit from the fact that you can bet anytime, anywhere now?
Well, I think it's going to be good for casinos initially, but let's face it, it's going to open up the door for a lot of online activities. Some of the sports, we think about traditional sports betting like you're going to bet on the basketball game or the football game, but this fantasy sports thing, that's going to be huge. For example, I think some of the big networks, of course, have got into that. Some of the big media companies, and they may benefit from sports betting across the country.
The leagues are going to benefit because they're going to get a piece of it. I like MGM stock. It's been traded between 30 and 35 for a year, so that target's 40 on a breakout. This used to be a $100 stock. You know what? Who's going to benefit?
Who?
Pizza.
Pizza? Why pizza?
People are going to sit at home and watch the games and order pizza.
Taking it to round number two now, guys. Cash in or cash out. There are an unbelievable 1,600 cryptocurrencies. Too much or too little?
Just remember how many .com companies there were in the beginning of the .com bubble. Not many survived, right? But if you picked the right ones, you did very well. What about how many auto companies were there back in the day? There were 50 different auto companies.
Studebaker.
That was his first car, basically, but they're all gone, and we ended up with
Michiana, right over the border.
Michiana, beautiful.
But as far as cryptos go, we've said before, I'll trade anything, any direction, any time, as long as it has liquidity. I can get in it out, and again, back to controlling my risk and knowing what my exposure is. So if you can do that, I'll trade it. And the futures contracts offer that feature right now. So that's where I'm looking, not necessarily the hard coin. I don't think there's a hard coin, but you know what I mean, right?
Right, but they made one that looks really pretty. It looks like a real coin for the Bitcoin. But you can't really use it.
Yeah, it's not
But
useful.
Anyway, actually,
it goes in your virtual wallet.
Actually,
hang on, is your virtual wallet?
Oh, great. Now we have to worry about our virtual wallets. Let's take it to round number three, Wealth Alert. Personal wealth is peaking. Is this a sell-off signal for the stock market?
What we're seeing here right now, this ratio where people's net worth divided by what they make annually, is you're getting a wealth effect. That in the past has been a very negative sign for the market. What do you think that means for the market here?
I think it means that we're getting back to where we should have been the whole time for the last 10 years, and that the economy is getting better. And we missed out on a decade of growth, partly because of bad economic policies, and I think that now this so-called wealth effect is only begun. I think we're going to see it get a lot stronger. I think the financial crisis slowed down U.S. wealth creation. And look at people's wages. People aren't making more money even though their houses are worth more. That's going to be the next part of that wealth effect, and then we're really going to feel rich.
Yeah, we're starting to bounce off this bottom in some of these commodities markets, so it's starting to spill over into all aspects of economics. But let's do the math on this. For the S&P to double in the next 5 years, we'd have to have an average of about 14.5%. That's doable.
Time to put those thinking caps on for the bonus round question for today. There are an estimated 15 S&P stocks that pay out a 4% or more dividend. That is actually higher than the 10-year yield. Can you name the phony stock? Is it IBM, General Mills, or Starbucks?
Starbucks does not.
Starbucks did not. What was
does
the
not.
question?
Actually, they're going to open up 3,000 new stores in China, but Starbucks dividend is not more than 4%. I don't think.
I'm going to say General Mills. What was the other one? General Mills and
IBM.
IBM is correct.
Alan, you won. The correct answer is Starbucks.
Starbucks it is. Congratulations. Got to give it to you.
Winner, winner, chicken dinner.
Free coffee.
I think you should get a cup of coffee.
I like tea. Iced, unsweetened iced tea, please.
There you go. Thank you.
See, look. No caffeine.
Business First AM continues right after this. Great job, guys.